Welcome to our daily Bitcoin update, where we share our market perspectives, trading and volatility strategies. Please note, our content is not investment advice, or is this an educational channel? Our content is intended for entertainment purposes only. Our content is clickbait-free with no affiliations with exchanges or paid sponsors. We are a small team of investment professionals with decades of experience in traditional finance. Our careers span roles as traders, market makers, and portfolio managers for top-tier institutions. As proprietary traders of digital assets, we have developed a proprietary methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs from traditional finance and technical analysis. Our methodology translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms, with a focus on market structure, liquidity, volatility, and time-price volume relationships. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. Bitcoin liquidity seeking played out to script with a hunt in yesterday's New York session, driving price close to 60K. Concentrated liquidity, residing at 61.5K, which was engineered over the weekend, was finally tapped, with those liquidations perpetuating the descent, where BTC found support at 60K, a key psychological level and point of interest which brought fresh demand for an inflection higher in the Asian and London sessions. BTC, however, did not take out the low at 59.8K, which on one hand preserved local bullish market structure painting a higher low, but left liquidity at 59.5K behind, which raises the probability of a reverting to this zone for another attempt to tap that liquidity in the coming sessions. If momentum to the upside builds, liquidity in the 62.5-64K zone will function as a magnet for market makers. This being said, we see the probable daily trading range skewed to the upside between 59.5K and 64K versus current price in London session near 61K. Our assessment of price action was a combination of significant ETF outflows for 2 consecutive sessions, risk aversion following fears of US government BTC reserves selling pressure due to legal proceedings, freeing up nearly $4 billion as available for sale relating to Silk Road confiscation, and a tailwind from predatory market maker behavior driving price opportunistically to liquidity zones. Consequently, sentiment dipped from neutral into fear overnight, according to the Crypto Greed and Fear Index. Additionally, the US CPI data released today has participants on edge, looking for a catalyst for the trajectory of asset prices. Future liquidity conditions are also dependent on the outcome, given the recently expressed focus on economic data from the US Federal Reserve in their reaction function for monetary policy. On a positive note, US presidential election polls and betting markets show the probability of a Trump victory growing beyond margins of error. Shifts in polls in the swing states have also tilted electoral votes to indicate a potential landslide victory for Trump. In terms of supply-demand technicals, fears of the $4 billion US selling pressure relating to Silk Road are dwarfed by the $16 billion payouts from FTX to its creditors, which will be dispersed over the coming months. Looking to volatility markets for additional indications of sentiment and trajectory of price, volatility in short expiries is elevated due to near-term event risk, such as CPI and elevated tensions in the Middle East. Correspondingly, the call put skew is negative in short expiries, reflecting risk aversion as demand for buyers of protection exceeds that of speculative buying of calls. In longer expiries going into year-end, the skew is positive and the term structure of implied volatility positive sloped, reflecting expectations of higher prices and volatility following the US elections going into year-end. In terms of strategy, we have moved our tactical directional bias from neutral to a slight long. Our long-term bias also remains to higher prices as bullish market structure remains intact and invalidation levels are not within close proximity. Thus, in the absence of a significant negative catalyst from the CPI or other event, our conviction in a long bias will increase if price continues lower. Volatility strategies. We are running low risk given thin volatility risk premia. We are exercising patience for higher volatility positive carry and mean reversion opportunities. As always, do your own research and analysis. Be safe and good luck in trading.